Speaking about some new companies, the new listing today was that of Shadowfax Technologies. Abhishek Bansal joins in. It was a softish listing in this market. Obviously, the issue was subscribed about 3 times as well, led largely by QIBs and a bunch of retail investors. A momentous occasion, as you can see on your screen, the visuals, the founders ringing the bell out there, listing at 112 rupees versus the issue price of a little over 120 rupees itself. Abhishek, thank you so much for joining in. Irrespective of the way the market is poised right now, it is an important day in the life of your company, and more importantly, it's the start of a journey where you will have to speak to investors on a regular basis, and it's a milestone, not a destination, as we say in the listed universe. Thank you for joining in, and congratulations on achieving this milestone. Now, speaking about milestones, the last time you joined us, you did say that, this 30-35% sort of revenue growth is likely to sustain. The first half of this year, you've done 68% because of increased aggression towards growth. And typically, the second half of this year, or any year, you do about 60% of revenues. So if I back calculate that, given your first half numbers, you are pretty much on track to that 4,500 crores this year. Is that a milestone that the analysts should work with, at least for FY26?
Thank you for having me here. It's my pleasure to speak to everyone. Well, again, as you would understand, it's tough to give a forward-looking guidance.
Now you're listed. You don't need to worry.
Publicly disclose our numbers. Yeah. No. I mean, we have had a phenomenal season. We look forward to delivering an exciting year of growth. And we believe that the growth that we have seen this year will continue happening over the next few years. With the capital markets behind us, we are going to rapidly invest into automation, building state-of-the-art technology, and more importantly, trust between our customers, our sellers, and ensuring that every household in this country is being serviced by Shadowfax.
Okay, all right. But Abhishek, first of all, good morning. Congratulations on the listing. And I love the visuals that come in during these listing celebrations, right? Because you'll take all the kids from the family, all of them get to ring the bell. Lovely sights out there. But now a lot of responsibility on you guys. So give us a few more details. Street is pricing in 145 crores of EBITDA this year. Is it possible?
Again, tough to give you a number like this.
No, Abhishek, now you can give. The regulator's on board. You're already listed. It's okay.
No. I think we'll wait for the official communication.
Let's try it this way. You don't give us numbers. Just tell us whether our thinking is on the right track or not. Basis what you've done in the first half versus what you usually do in the second half. 4,000 crore revenue, is that on the right track on our thought process? And, as what Nigel asked, about 140, 145 crores in terms of EBITDA, because that's what the street is pricing in when they assign a multiple to you. So we just want to know whether the street's thinking is in the right direction or not. Is the thinking in the right direction?
Yeah. No, you're thinking in the right direction. That's the number we are aspiring for. And again, given how second half of the year generally looks like, we have grown very, very aggressively at 65% in the first half. Second half being the festive season, we expect some good results to come in. Our first results will probably be out in another 2.5 weeks from now. So looking forward to that.
So ballpark then, margins will be in the mid-single digits, right?
Yeah. Margins will gradually improve. We operated at about 2% EBITDA last year. This year, we have operated in the first half at about 2.9% EBITDA. We are going to see gradual increase in margins every quarter.
Now you're talking, Abhishek. We like it. So what is the longer-term horizon in terms of margins? Where is it headed? High single digit, not in the near term, in a longer term.
See, a business like ours, if you look at some of the global economies, some of the Western countries, you will see typically express parcel companies operate at a early pre-teen sort of an EBITDA number. I think that's a sort of a number we'll probably look to aim towards over the next, or in a steady state sort of a view.
In the next 5 years?
Hopefully, yes.
Hopefully, yes. All right. Next 5 years, pre-teen sort of margins, that's the global aspiration or the global benchmark, and that's your aspiration. But that also means that you'll have to do a lot more of your value-added services. Currently, it's about 40-45% of sales. where do you expect that mix to go? And also quick commerce, which is about 20% of your business, where do you expect that to go?
I think value-added services are a very, very important part of our business. It is something which our customers love, which create a big differentiation for us thanks to the tech agility and some of the rollouts that we have been doing. We expect value-added services to remain a similar sort of a market share for us as part of the overall portfolio. Quick commerce, again, it's growing at a rapid pace. It's probably one of the fastest growing verticals for us as well as for the industry. We are going to see accelerated growth for us today. Quick commerce is at about 20% of our business. It'll marginally grow by about, in terms of the split, maybe about close to 30 to 40% over the next 4 to 5 years.
And is quick commerce more margin accretive for you?
No, it is. I mean, we are probably the single largest players in quick commerce in the country today. We power every quick commerce company, be it horizontal quick commerce, vertical quick commerce. And if you look at quick commerce as a business, it's a platform play. It's a very, very high return on capital invested business for us. Completely a platform play where we're working with every player who's delivering to our home in minutes today.
Abhishek, one final question from my end before we let you go. The top client accounts for around 50% of business. Is there, a focus on, de-risking from this top client?
Absolutely. That's probably one of the biggest focus for any organization, and especially in a market structure where we are today. In our structure, given, the top customer in a quick commerce vertical, or be it in a e-commerce vertical for the industry, they'll account for a lion's market share, and that certainly reflects in the market share for a logistics company like us as well. But as I've said before, I think one of the biggest targets for us, now we have built out the network, we have got the anchor customers, we have got profitability. The idea is to democratize this service and take it to every seller, every D2C brand in this country. One of the biggest areas we are going to invest in is ensuring that every small seller, every small D2C brand starts using Shadowfax, and over the next 4 to 5 years, we become the de facto of doing logistics in this country.
Right. A lot of the logistics players, a large logistic player in the country, be it a traditional one or the new age ones, everyone aspires to deliver everywhere in the country. So it is heating up when it comes to competition as well. But like you said, execution and value-added services that you give will be differentiators for players. You've gained market share. Let's see whether you sustain it out there or not in the eyes of intense competition. Just a final question before we let you go, Abhishek. You've also earmarked 200 crore for acquisition. Have you, enlisted any sort of potential asset that you want? What are your acquisition timelines here? Can we hear anything very soon?
So again, we are pretty exploratory in terms of acquisition, nothing that I can disclose right now. Our whole idea from an M&A standpoint is to acquire interesting categories. Last year, we made a small acquisition in this company called Critical Log, which was doing high value, time-sensitive sort of deliveries. We love that asset. We saw at a great value add to our existing customers. We love doing value-added services, and anything and everything which we can sell to our customers, which can be differentiated from the market, where we can charge a premium, is something that we'll be interested in. But nothing in the next couple of quarters which I can disclose right now. Yeah, but you said that you are eyeing some value-added spaces. Is there any place where you see a gap in your portfolio which you think is very interesting, very small in the market right now, but you expect it's going to be big? And I'm not asking for specific companies, names or anything, just capabilities. If you could give us a sense on the direction that you're looking at. I think one of the biggest capabilities now we are getting into is white goods and delivering some of the larger items. That's one portfolio which is missing for us. It is going to be a big driver of market share growth, revenue growth for us in the coming years, and that is something that we are investing in right now. All right, Abhishek, thank you so much for joining in. Subdued listing today, but good future is what you are promising the street, and the street will take note of that. Good luck to you, your family, and congratulations once again. We'll speak after your quarterly numbers are reported.